What an awesome day, guys and gals. An awesome day. Big green up day. 85.25 range. We like that. September 22nd, a little bit after 4 o'clock Central Standard Time here in the great state of Texas. The market just closed. The futures market just closed a few minutes ago. We're looking at the S&P 500 index futures, upper left-hand corner, December 2021 contracts. I normally trade the the E-micro, which would be MES. Wow, what an awesome day. Look at that big green candlestick there in the upper right-hand corner. I'm liking that. You know, I was concerned if this may sound weird, but I was concerned if this candlestick got up into triple digits. Like if it starts getting to, a 100 range day, that may sound good, and it is for long side trades, which, by the way, stick around for the end of the video today. I'll tell you whether or not I made any money. Because so far, almost all of you have seen me just trading the short side. So can this guy make any money on the long side? He's always talking red, red, red. What does he do on green days? Stick around. We'll talk about that. So I was concerned if this gets up, into the triple digits, like 105 or higher, because that often, I should say, will impact the next day's trading in a negative way, meaning just the opposite. Sometimes on big green days, especially after you've had a lot of downward price action, if you get a big, huge rebound day, then the next day sometimes will be red. That could still happen tomorrow. It's possible. But I'll talk about that at the end of the video after the profit loss. I'll talk about what I think is going to happen tomorrow. Okay, so if we look below at the stochastic momentum index, we're just maybe starting to see a hint of it crossing over. But, we do not have confirmation yet that this next cycle or the previous cycle is over, or the downtrend is over, and the upcycles and the upward pricing of this new cycle has begun. We don't really have confirmation on that yet. Okay, as you can see, the green arcs below the candlesticks, those are the daily cycles. Ignore the yellow arcs and ignore the red arcs. We're only talking about the green ones just below the candlestick. So you can see where the two arcs come together that we just had the cycle low, which we had that inverted hammer yesterday, which is perfect. I mean, that's what you want to see. That's a great candlestick for a bottom. When you see that kind of candlestick, inverted hammer, that's a really good sign. Okay, so we'll see what happens tomorrow. Like I said, we'll check that out tomorrow. But the stochastic momentum index below the candlesticks there, we don't really have solid confirmation. So and today I traded accordingly. Okay, stick around. I'll talk about that. Below that we have the Big Daddy forecast, which is just saying tomorrow is going to be an up day. The VIX Monday was 25.71. Got some really elevated VIX volatility going on, right? And then yesterday it came down a little bit to 24.36. Actually, not down a little bit, down a lot, like 1.4. That's a huge movement in volatility. And then today, down huge, almost 4 points, like 3.5 point drop in the VIX today. So, all the signs are saying we're going to get some upward price action. That's what this is saying. Okay. The VIX is beginning to calm down, but it's not like really calm down. It's still above 20, and we got to pay attention because you could get a red day, if I could snap my fingers, just like that. It could happen, especially in this kind of market. You could get a red day, lickety split. So keep your ear to the ground, as they say. Okay, at the very bottom, we got the Dow Jones Transportation. You guessed it, the divergence still continues. Okay, until the S&P 500 trades below the May 10th close. Okay, which is nowhere near that. Okay, so if you want to know, you go back and look at May 10th. If the S&P 500 closes below that May 10th close, then I could say we're probably beginning to be back in sync between the Dow Jones Transportation and S&P 500. That has not happened yet. That tells me over the long run, weeks, months, I expect the S&P 500 to continue to come down on the average through this fall, this winter. Okay? This on the big picture, guys, remember this. I don't believe this is over. For this daily cycle, I think we're going to get some upward price action. But far as the big picture, the more long picture, weekly, monthly cycles, I don't think so. I think downward pricing is going to continue throughout the fall, winter, maybe going into very early part of 2022. I still contend that. I said that back on August 12th we would have a crash. I believe it's still coming. All right, for now, though, we had a nice green day. A nice, beautiful green day. Oh, yeah, that was nice. Now, we had the FMOC meeting today. So that's what we got in front of us here. For those that don't know what that means, look at the upper right-hand corner. This was released 2 o'clock today, September 22nd, 2021. The FOMC stands for the Federal Open Market Committee. Basically, these are a bunch of goofballs that think they know better than free markets. And they manipulate monetary policy, and they think they're doing the world justice. But we all know they're just a bunch of boneheads manipulating the marketplace and all this nonsense, whatever. I say let the free markets reign. Let them do their thing. Oh no, we have to have massive regulations. I'm not opposed to some regulations, guys and gals. I can understand some regulations, but this is ridiculous. These guys are major coercers and manipulators. Okay, constantly screwing things up. Look at the national debt. United States of America is what? I haven't even looked lately. 30 trillion. Let me look. Let me hit this while we're on this video. Let me just look at national debt. National debt. Where is it? National debt clock. Hit it. Do it. Where's it at? Yeah, $28.7 trillion. That's these boneheads, guys. You want to know what they do? They do that. They do the national debt. If you don't know what the national debt is, go to usdebtclock.org. USDEBT clock.org. Upper left-hand corner there, you'll see the U.S. national debt. Yeah, it's churning over faster than a roadrunner booking through Texas. Yeah, that's what these goofballs do. Nation destroyers. Hey, we're the Federal Reserve. We know what we're doing. No, you don't. Well, maybe they do. You know what I mean? Maybe they do know what they're doing. Yeah. Anyway, Federal Open Market Committee of goofballs. And the most important thing that came out of the whole meeting was the federal funds rate. You see it there in a red rectangle. Well, what is that? That's the interest rate at which banks and other depository institutions lend money to each other, usually on an overnight basis. But what does it really mean to everybody else? Well, it means business, home, and auto loans get more expensive. Okay? Well, what am I talking about? I'm talking about, if you look there, you see 2021. Currently, right now, the federal funds rate, the rate at which banks lend each other money, and downstream it impacts business, home, and auto loans, right? Right now in 2021, that rate is between 0 and 0.25%. That's right, percent, like not less than 1%. It's been that way forever and a day. Every time they try to make an adjustment, boom, it blows everything up and they get scared and panic and they pull it back down. These guys couldn't find their way out of a damn box. So what they're saying is in 2022, they plan on upping the rate, the federal funds rate, to 0.25 to all the way up to 0.75%. Still less than 1%. Okay, you can see down there at the bottom in the 2022 column, I got a red square, and you can see that they're projecting that they're going to raise the rates. Still below 1% for 2022. Okay, so that was the news that came out today. How did the market respond? The market doesn't give a crap. The market didn't flinch, guys. It may flinch in the future as we approach, 2022. We'll see. But right now, the market didn't give a damn about what these clowns had to say. You want to talk about clowns? Those are real clowns. Goofballs. So that's what they say is going to happen in 2022. You want to know what they've done in the past? They make rate changes like this, little small ones, and the whole entire world financial world goes into a panic, and then they freak out and they bring it back down. Because you know why? Because they painted themselves in a corner. They made this mess, this $29 trillion national debt mess, that we will never, ever pay off that debt. Sorry, I'm not trying to be a pessimist. Okay? But I'm a realist when it comes to that crazy amount of debt. They'll never pay it off. It's just not going to happen, guys. There may be like some massive global reset, but forget about that debt ever being washed. I mean, legitimately recovered and paid off. Ain't going to happen. Ain't going to happen. And these goofballs who claim to be regulating and keeping it all together, all they ever do is destroy. So that's the word on the FOMC boneheads. Okay, let's take a look at one more thing, and then I'll talk about my profit loss. I've been talking about the Aussie dollar. Just real quick here, upper left-hand corner, this is the Aussie dollar, 6A futures. Okay, when I do trade this product, I trade the M6A, so just be aware of that. Okay, to the right of the screen there, you see it says Aussie dollar, inverted hammer bottom. Hey, we finally got a green candlestick. It ain't much of one, but look at that. Inside the circle, we got an inverted hammer bottom. Looks just like the stock market from yesterday. Excuse me. Just ate my lunch. So, at least we got something. A green candlestick. It's not a very pretty one. Inverted hammer. It's exactly at the cycle low. That's exactly an ideal candlestick you want to see at a cycle low. So that is just, that's a thing of beauty, baby. If I could speak really fluent Italian, I would speak a sexy Italian accent right now, but I just don't got it in me. But that's what I would be doing, because that candlestick is a beautiful thing. It's beautiful. Okay, at the very bottom there, you see the stochastic momentum index for the Aussie dollar is about to cross over, trying hard to cross over. I almost took a trade on this today, but I told myself, don't touch it. Don't touch it. Wait until you get a good green candlestick. Well, we didn't get a good green candlestick yet, so I'm so glad I didn't take a long position today, because it would have caught me out, because early in the day it was up. So I'm actually listening to my own advice, guys. Can you believe that? Listen to my own advice. I stayed patient today. Okay, let's talk about my profit loss. Did I have a profit loss? Let's look at, what am I looking at? First, going to look at, I actually traded two different futures products. First, crude oil. Here it is. I traded the MCL Z21, which is the December 2021 contracts for micro crude oil. So if you want to know what that symbol is, it's up there in the left-hand corner. M is in Mary, CL, Z21. And you can see to the far right there, two yellow rectangles. I traded 15 contracts today. I traded kind of small. I did I don't remember, 2 and 3 contracts. I think I did one or two 5s in there. $261 profit for the day. Nice. I kept these trades kind of small today. I knew the FOMC goofballs were going to come out and do their stupid meeting today. So I just kept it small in the crude oil here and made a nice little profit, $261. I'm definitely a happy camper. That turned out really, really well. I'll keep an eye on crude oil. I'm not sure I'll take another trade, but if I do, I'll definitely let you guys know. Okay, let's look at what happened anywhere else. What else did I trade? I traded, here it is. This is the S&P 500 futures. I trade the E-micro, MESZ21. To the right there, you can see I traded 19 contracts. Usually I trade a lot more than that, but today I didn't. $308.75. Nice, solid day. So total today, I guess about $570 a day between the crude oil and the S&P 500. So nice, solid day. I'm a happy camper. Today I didn't like that we didn't have good confirmation. I don't like trading when we don't have confirmation. Sometimes I don't trade at all. But this was such a huge green day that I just said, okay, I did a lot of 2Z and 3Z kind of contracts. Normally I'm doing 13 and 12 and a lot more, but I cut my position size down to a third today because I just wasn't really sure what the market was going to do, and I didn't want to get caught out. And it served me well. A really solid, very solid day. So I did a lot of 3s and 2s, and I kind of nitpicked a little bit here at the end of the day and picked up $30 and $40 here and there. So it was a nice little solid day. 570 total for the day, about somewhere around there for the total profit loss. Liking that. Tomorrow, so that's it for profit loss for me today. Nice solid day. Happy camper. Let's go back to the S&P 500 review. What do I think is going to happen tomorrow? Well, remember I said at the beginning of the show here, the beginning of the video, that I'm glad we didn't hit triple digits, because then I would have been kind of hemming and hawing about maybe a possible red day. But we didn't have that. We had a nice, strong, solid 85-point range. That is right, I feel like, in the go zone. Okay? And what go zone am I talking about? I think tomorrow, I'm totally guessing, but I think we're going to have anywhere from like a 30 to 50 point range day. Somewhere in there. I could be totally wrong and miss it, but that's my best guess for tomorrow. 30 to 50 point range green day is what I think will happen tomorrow. However, and I'll probably trade accordingly based on what I think that's going to happen, okay? However, this has happened in the past where you get this nice solid green day and you still got some unwinding of positions going on post options expiration. Sometimes you still get these unwindings and these big movements. So I'm just putting out there that I've seen this time of year, in looking at the history, I've seen big red days following a day like this, where you have all these red candlesticks for the last 2 weeks. All these red candlesticks putting downward pressure. And then we had that inverted hammer yesterday. You get a nice solid green day, and then bang, the next day, right back to a big red day. And then you get a lot of back and forth, red, green, sideways action. So I would not be surprised if that could also happen. And I'm not just playing 50-50 and all that. I'm just saying I've seen that happen where you get a big green day and then you get the red day the next day. Okay, so that's something just to keep in the back of your mind. But if I had to pick between the two, I'm more inclined to think tomorrow will be a 30 to 50 point green day positive side. All right, if you haven't subscribed to my YouTube channel, click the subscribe button. Give me a thumbs up. I really appreciate it. Don't forget to click that little bell to be notified of all the videos that I put them out. We'll talk to you all real soon again next time.